Hi, everyone. Welcome to the session. Unfortunately, our CEO, Kieran James Lubin, was not able to make it today, so now you're stuck with the three of us. So let me tell you who we are. My name is Roberto Mandanas. I am the VP of Marketing at Block Apps.
Hi, I'm Jeffrey Powell. I'm VP of Sales at Block Apps.
Good afternoon. My name is Phil Harris. I'm currently an entrepreneur in residence at Block Apps, and thank you for joining us in person and those that are joining us online. Thank you for your audience.
So let me tell you a little bit about our company and how we got started. Our founders were some of the original developers of Ethereum. Pretty interesting story. Kieran James Lubin, who is one of our founders and our CEO, he actually was at Cal Berkeley doing his PhD in mathematical physics and met Vitalik. And so this was 2013, 2014, and there was a lot of different groups, like separate groups working on Ethereum. So he and Vitalik got together and said, let's invite everyone together and see what we can do together. So they sent the email out that got the first group of 57 of the original Ethereum founders and developers working together. So Kieran actually was one of the developers of Solidity, the smart contract language for Ethereum. So our founders got together, and basically they said, wow, this Ethereum technology we have is very powerful. And of course, the first use case was cryptocurrency, but they felt that for it to really reach its full potential, it really had to be a technology that could be used by the masses, right? So very early on, they pivoted from cryptocurrency as being the main use case, and they optimized Ethereum for business use cases and real world assets. So Block Apps as a company from the very beginning has been focusing on digitizing real world assets so that there's applications that Fortune 500 companies could make use of, and all of us could really use and benefit from, instead of the smaller group of people that are actually focusing on cryptocurrency and speculative assets. So we're on the other side of the spectrum in terms of what we do as a company. So we were the first company actually to partner with all the major cloud vendors, AWS, Microsoft, Azure, Google, and actually we were the first company to come out with blockchain as a service. We've certainly evolved a lot as a company since then. I mean, originally, as part of our blockchain as a service offering, right, we built customized assets. I mean, we built customized applications for Fortune 500 companies. And then we evolved into selling our platform as a SaaS offering. And now what we'll talk to you about today is actually the marketplace we're building. And we have certain applications within different categories that we're making as part of our marketplace. Some of the Fortune 500 companies that we've worked with, we've had several projects with Bear Crop Science. Actually, we've worked with them to help track their soybean seeds, and we've actually had our platform be the underlying infrastructure for their value chain as they go from growers to dealers to farmers to the silo to the grain silo. Our technology is used to track that bag of seed through every facet of their value chain. That's just another example of what we've done, with Fortune 500 companies. We also work with the largest construction company in Australia, Downer, and we're helping them manage their vendor payments and invoicing. So as I mentioned earlier, the company was founded as soon as Kieran actually left his PhD program in 2015. We raised our first round in 2016. And then, again, with the enterprise focus, we're actually some of the founding members of the Enterprise Ethereum Alliance. So we're very influential with that governing body as well. And More recently, we actually went through another round of funding about 7 or 8 months ago. Liberty City Ventures is one of our key partners in that area, as well as Morgan Creek. And then as we're going to talk about more today, we've actually launched Strato Mercata, our platform, but we're building a marketplace using that technology. So let's talk a little bit about the challenges in our space and how we're addressing them. Oh, Jeff.
Man, that was a long intro by the marketing guy, I gotta say. Wow. Well, thanks everybody for being here. I have to say it's really exciting to look out over the audience and see more people I don't know than people I actually do know. That's really not what I expected, so thanks everybody for being here. So there's going to be a variety of slides that are going to play in the background while we're talking about this, but you know, since I'm the sales guy, I'm going to talk about what I really want to talk about. And so, you know, at this conference, you hear people, you know, talking about real-world assets, and I've been really interested going to other panels, other presentations, hearing about real-world assets. But what it seems like the people who are talking about, and I'm not disparaging anybody, I'm just want to get to a difference with us, when they seem to be talking about real-world assets, they seem to be talking about financial products. And it's the concept of putting financial products on blockchain. And you know, that's great, we're in favor of that. But when we talk about real-world assets, we actually mean things. We're actually talking about buying, selling, and trading of actual physical things on blockchain. And you know, I'm sure that you know, most of us, if not all of us, are you know, familiar with the NFT market and what you know, that has meant, you know, which is essentially you know, digital images of things. And of course, some of those have you know, sold for a lot of money. But that's really been a bubble with the NFT. There's these bubbles where things, you know, get popular and people buy them and then they fade away. You know, we're trying to do something longer term. So Roberto mentioned how we launched Mercata. And Mercata is really a marketplace where we're facilitating the buying and selling of assets. And these can be many different things. They could in fact be NFTs. But what we're more interested in is things like real estate, or carbon credits, or artwork, or a variety of things. Real world assets that could be on the chain, could be tokenized, could be fractionalized, maybe there are NFTs with them, but it's really a different concept than what I hear anybody else here talking about.
Yeah, I think I'd add to Jeff's comments that there are properties of what we all fell in love with, the blockchain, whenever we heard about it, you know, at the very beginning or in the middle, that it opened up equity and inclusion. Basically, more people can participate and the barriers are lower, as a very broad kind of statement to kind of ground us. And so when you look at instruments like art and real estate, regular folk can't have that in their investment portfolio because those assets are illiquid. There might be certain regulatory barriers that prevent you and me from buying them. And so this is what's core to blockchain and some of its value prop is that it can flatten that. And so we really rally around this call to bring, you know, physical assets, as Jeff and Roberto have mentioned, but, you know, flatten some of the ways of getting involved and, you know, fractionalizing that, meaning an asset that is worth a lot of money, it won't be held by one person, it could be held by 1 million people, just as an example.
Yeah, and it's really interesting when you know, you talk about fractionalization, or, I mean, does everybody know what we're talking about when we say fractionalization, right? You know, don't need to explain that. Okay, so what's interesting about that in terms of liquidity is that's not necessarily an end point. And you know, when we talk about real world assets, there are things that could still be bundled as investment properties. So, you know, you may be familiar with that, for example, BlackRock spent $1 billion on buying single family houses. And this type of thing is going on in the financial world. Banks, hedge funds are buying houses. Now, let's scale that back a little bit and not think about like $1 billion worth of houses, but you know, think about maybe a city or a community that is looking to make home ownership more affordable. maybe they might take 50 houses or something like that, or even things that might be vacant properties or properties that might have been claimed in foreclosure or something. An entity could invest in those houses, could fractionalize them, tokenize them, take an investment from them. It doesn't have to be institutional capital. It could be individuals investing in them, so it becomes an investment item, but then also those houses could be sold. So it's talking about like ways to take these illiquid assets and actually bring liquidity to them.
So really what we're trying to do here is make the markets more efficient, and we're trying to democratize the ability for not just big corporations to partake in transactions, right? It's really about getting rid, in many ways, of that middleman or that middle person, and having it available to everyone like you and me, right?
Right, and between the buyer and that asset for sale, there could be multiple parties that are all going to take a transaction fee or some fee within the transaction. And so if you can remove some of those people or dismantle some of the higher fees, again, the benefit is there for the buyer and the seller. Jeff, that's definitely your slide.
Well, this is basically what I've been talking about since I started
Since breakfast.
Since I started talking. Real world assets to improve market performance. And when we talk about improving market performance, we're of course talking about idealistic things like limiting fraud or removing fraud and stuff like that. But it's really the availability of making investment properties available to all, right? And it really depends on what your interest is in that. I'm sure that many people here have various portfolios, whether or not it's stocks, bonds, other types of investments. But a lot of that stuff, even if you have it, even if it's something that brings returns for you, you don't necessarily know what they are. We based upon our experience in talking to people, if you could invest in things, that actually exist, I mentioned like, a block of houses, but maybe it would be an art collection or whatever it might be, something that, has real world properties that you could buy a piece of. It could also be something that you're interested in. Maybe you are really interested in art or some type of other collectibles or music or whatever it might be. You could actually invest in something that right now is not available to you. And I don't just mean trying to invest in the Mona Lisa or something like that. But you could invest in artwork that you can't buy and own by yourself, but you could own a piece of it, and you could have NFTs of it that not only prove your ownership, but give you visibility of it as well. And also, we're looking to do this, using our system to eliminate middlemen, to eliminate unnecessary fees. And really, this type of sales process, including peer-to-peer selling, is something that we're very interested in. I know I'm not going to harp on real estate too much, but I really do get focused on real estate because for us, the interest in real estate really started because we were in a meeting one day and we started talking about our own experiences in buying and selling houses and how slow it is, what a difficult process it is. And somebody said, while we're having this conversation, I could have gone on my phone and bought a car that somebody would have delivered to me tomorrow. Why can't buying a house be like that? Well, we would like to see that, not just with houses, I'm using this as an example, but something where there's a lot of regulatory requirements, a lot of slowness, a lot of legal process. We're trying to eliminate that to really facilitate one person being able to sell something to somebody else, or one person selling to a group of people, or a group of people selling to one person, whatever it is, but to make it faster, more transparent, and ideally eliminate a lot of the costs that are involved in it.
So let's talk a little bit about the marketplace that we're building, right? So we have certain categories that we're focusing on, and we're building applications for those within this larger marketplace.
Keep going, Roberto.
So you want to talk about creator drops?
Creator drops. Okay. Well, this is going back to artwork, and I mean, I want to say that we're working on many different projects right now. Many different things we're looking at bringing to market, and so there's more than we're going to talk about now. But this is something that we're excited about, and really it goes back to the concept of art and creators. And so, we want to make it easier, particularly for, oh man, losing people already. We want to make it easier for, emerging artists to connect to bigger audiences and also generate better income streams. So, the idea is that, if a creator is dropping something, launching it online, our system would give them the ability to do so, have the item sold, have no middleman involved in that selling process, and also have the artist be able to receive royalties on subsequent sales. We talked about NFTs.
Yeah, and this is, the high transaction costs that are in the legacy art market, where the gallery or the auction house would take a significant piece of the notional value of the painting. We've seen upwards of 50%, which is a crazy number. And I think, these markets that may not be the obvious choices for blockchain-enabled technology to play a role, but it's something that we're definitely laser focused on.
But also just talking about, creators and e-commerce, it's also we're trying to benefit the creators in multiple sales. So if you create something and you sell it to someone, you're going to get, whatever you sell it to them for. But if you sell something, create something, you sell it to them for $1,000, and then they sell it to someone else for $10,000. That first owner and subsequent seller, they're the person who's going to receive the money. We want to have a system where the artist is going to retain royalties for those secondary sales. What happened?
What happened?
We have a user error here.
I think it's.
I didn't.
Sorry about this. I don't know. It's not even a.
Yeah, just skip now. Yeah, there you go.
Okay, sorry about this. I don't know what happened here.
We're going to blame Roberto for this.
So the other use case we're working on will actually, Phil, who we brought on, is going to talk more. Phil is leading our efforts to really leverage blockchain for the carbon markets, and he can talk more about that project itself.
So this is where I'm going to require audience participation. Okay, so I'd like you to raise your hand. Next slide. I want to raise your hand if you're aware of climate change. Please raise your hand and be honest. Okay. Now, next slide. I want to keep your hand up if you feel as though you've been the opportunity to do anything about it. Right, good, because that's what I was hoping to see, and that was what I was expecting to see. Next slide. So, the fact of the matter is that people are consciously aware of what's going on in the environment, but you can't really do anything about it other than maybe recycle. And that is not really, going to make a significant impact.
Although recycling is very important, Phil.
I'm not saying it's not, Jeffrey, but I'm just saying that, yes, it's not enough. I feel as though I want to do more as a human being, and I'm sure that is shared amongst the crowd. Now, I like Richard Branson, someone I look up to, and this is one of my favorite quotes, but one of my favorite Richard Branson quotes, and that he acknowledges climate change and the huge amount of work and challenges that need to be done. But you need to bring in governments, businesses, and people just like you and me if we're really going to do something about it. Next slide. And so there is this thing called the voluntary carbon market, and it is voluntary. So the buy-in and the adoption historically, if you look over the last 15, 20 years, hasn't really, grown to a sizable amount. And recently, we've seen 3 things that we identify with that are causing problems or friction points within this industry. And the first one that we call out is trust. that there's a lack of trust in the system generally around the quality of carbon assets or credits that are being sold. The second, this is the biggest problem in my own mind, liquidity. So what do we mean by liquidity? Again, my colleagues talked about liquidity, and it takes on different interpretations when you're talking about different types of markets. This is what I mean when I talk about liquidity in carbon markets. Carbon projects are very capital intensive. They take tens of millions, if not hundreds of millions of dollars to build machines and capabilities that are going to reduce the amount of carbon in the atmosphere. And there was a recent report came out, I think 2 or 3 weeks ago, I forget the author, but it was estimated that only 16% of the amount of capital needed for climate technology is actually being provided. And it is heavily weighted to institutions. So this is corporations, institutions, and asset managers that are putting all the money to work within kind of project and debt financing models, but they're falling short. More about that in a second. And the last one is scalability. Unfortunately, there's not enough infrastructure to keep up with the demands, and there's a minimum lack of industry standards, meaning that we're not all marching to the same drum. Next slide. Now, despite these friction points, which are real, they have to be solved. If you listen to smart people like McKinsey and Bloomberg, they project that this market of voluntary carbon credits by 2037 will be $1 trillion in value. Now that's a real meaningful number. In 2023, it was 3 billion. That's kind of the estimate. We didn't put it on this slide, but in 2020, it was worth 500 million. So it's going to grow from 500 million to over $1 trillion within 17 years. So that's 33,000%. I asked my marketing colleagues, Jordan and Esther, to make that number bigger. We got in a little fight over it. That's as big as they would allow me to make the number. But that's the number I want you to look at. It's over 30,000%. Now you look at any industry around you, and I challenge you to pick one that's going to have that size of growth in the future.
But
next slide.
Shouldn't the percentage sign be beside
It's the formatting.
numbers?
It's the formatting. Again, talk to Jordan. She's in the audience. So, now, carbon markets are not new, but the voluntary carbon market is going through its kind of moment in the sun. Now, the good news is that it's embracing blockchain-enabled technology. It's leapfrogging over all the legacy tech that other industries are plagued with. And here we can just call out a few. Scalability of other market technology, the compatibility with other systems and software, outdated functions. This market can ignore all of the problems, and those that love blockchain and all that it's going to do, the carbon market is rallying around and leaning very heavily into using blockchain-enabled infrastructure as it continues to grow and scale. Next slide. And we identify with a couple of elements that we believe are going to be core to what the blockchain market will help carbon markets do. It will reduce fees, again, a common theme within the rest of the slide. It will streamline certain business rules. It will, without question, increase traceability and transparency. And we see these as critical foundations to allow this market to grow. And my argument would be that that trillion might be way off, meaning that it could be significantly higher if we get the technology, the standards, and the infrastructure correct. Next slide, please. Now, going back to that earlier point, where 16% of the capital needs are being met, this is where you can get involved. So there's a term, DeFi. It took me a long time to really understand what DeFi means. Everyone might have a different interpretation of that, but ReFi is my favorite. Regenerative finance. So this is leaning into the equity and the inclusion properties of what blockchain was designed to be. So what do we mean by this? We're going to allow a crowdfunding type mechanism where people like you and me that care about the climate and want to do more than recycle to buy into the underlying projects. So you actually have skin in the game with climate technology that will do good things for our planet. But instead of leaning into project and debt finance markets where in some instances, buying that $1 of capital might cost 70 cents, a 70-30 model. We'll flip it. We're going to give 70 cents to those that build the technology, and 30 cents will pay for the infrastructure because there are obviously multiple parties in the way. So we're going to, create value by bridging that gap of all of this money which is needed for climate change. We're going to bring capital into the system to meet that unmet need. So kind of the thought is, why should large asset managers, large corporations, large institutions profit from climate change when we want to kind of shift that dynamic a little bit and allow for regular people to put this into their portfolio in a crowdfunding type mechanism that will be tokenized. So not only are you going to do right by the planet, you might also potentially make some kind of return.
So Phil, just along those lines, I mean, for some of us who might not be as familiar with carbon, when you talk about investing in carbon projects, like what does that mean? Like what kind of?
Yeah, so thank you, Jeff. Very good question. So there are kind of two categories. There's nature-based and there's industrial-based. So industrial is, I make a machine that might suck carbon from the atmosphere, turn food waste into fuel, suck elements out of the atmosphere and put it into rock or into the ocean. It's an incredible playground of innovation. And then there's nature-based, where you actually work with trees or forests or plants or soil. Trees are incredible carbon sinks in that when they do their thing, they basically turn carbon, photosynthesis, I don't want to get too heavy on the science, but they store carbon. They're like a digital vault for carbon, and they are the nature-based solutions. But there's an absence of capital to kind of bring this to life, and this is the small part that we want to play in doing right by the environment. That's basically what I wanted to cover on that subject. Very passionate about it. I'm hoping that you are too, because I want my grandchildren to be able to leave the front door without burning into a crisp. That would be nice.
Well, Phil, just continuing to talk about carbon projects, and something that one hears a lot about in the corporate world and in the investing world is ESG. Every corporation is talking about ESG, and is this what they're talking about?
Yeah, a little bit. I mean, the E and the S and the G, more E is kind of the narrative, the environmental piece. And so there might be a future state where you're actually buying products in the market. It has started to happen a little bit. That the carbon footprint of that sweater, that shoe, that gallon of milk, that orange, might come with some kind of climate or carbon footprint label on it. But I think consumers are consciously now aware, and they might shift their buying decisions based upon the carbon footprint of the food item or the clothing item, and not per se whether it looks good on them. Again, my own personal opinion.
Well, just to follow along and to get into some more audience participation. So, something that people talk to us about are, these issues of, green and green products and trackability and traceability. I mean, is this something that's interesting to people? I mean, if you could personally invest even small amounts of capital into carbon projects, is that something that's interesting to people? Show of hands or nodding your heads or whatever it might be.
Excellent, thank you.
Okay, that's great.
Thank you, that's what I want to see.
We want to see that, but also just talking about the types of things that we work on in blockchain as well. And actually, Phil and I have done a lot of work in the agriculture industry and blockchain. So, something that we've always been very interested in is traceability, food traceability. Where do your food projects come from? And of course, I mean, I don't know if anybody ever saw the show Portlandia, but there's that skit about where they're in a restaurant in Portland, ordering food and looking at the menu, and it's like the chicken. Can you tell me about the chicken's childhood? Did it have a happy childhood? But I'm not actually talking about that, but like, if you could go into a grocery store and you were buying an item, whether or not it was a piece of fruit or a product in a jar or a container or a box, whatever it is, and you could scan it and you could see the history of those ingredients, where they came from, how they were farmed, where they were farmed sustainably. Is that interesting to people? Like, would you do that? If you had an app on your phone, okay, all right. That's really that was really my curiosity, actually. Okay, thanks.
I mean, we can certainly wrap up. I mean, look, our booth is the giant one over there with the spinny thing on the top.
Well,
so,
but also, I mean, we've left time for questions.
Yeah.
We can take some questions.
yeah.
If anybody actually wants to hear us talk some more. Yes. Wait,
Yes.
We'll start with the young woman in the back.
Awesome.
So my question has to do with your example of the investment in the agriculture. So how exactly is it going to make any money, though, if, again, like, where are you trading it? Who's buying it, I guess? Are you selling it to the highest bidder? And then that way the initial investors are, because in a current economy, the way you make money is, as I constantly am, yeah, I have to sell it next to someone else to acquire it.
Yeah.
But if it's always diversified and owned by multiple people, how am I going to sell my share? Or are you treating it like the stock market? I guess I'm having a hard time grasping how much exactly. Yeah. Sorry if it's a dumb question.
yeah,
I'm just trying to understand it.
It's a very interesting question.
Yeah, well, go ahead. Go ahead.
No, you go ahead.
Well, I mean, every marketplace that we develop will have a primary and a secondary market. So when you buy a thing or an asset, there will be people that can buy that from you, and that can, basically be infinite. So that's kind of the thing about when you digitize a real world asset, or for that matter, tokenize anything, the secondary liquidity pool is as important than the primary liquidity pool. Because that's kind of what happens with the NFT market, that you bought something and you're stuck with it and you can't sell it on to the next person. So these are the investments that we're taking from general capital markets logic and infrastructure, that something can change hands multiple times. And if you heard my colleague speak earlier, if I'm an artist and I create something and I sell it, I will monetize through royalties if it's sold to, one person or 100 people. That 100th transaction, I'm going to monetize, get some piece of that transaction also.
I'm the buyer. I get it if I'm a creator. Totally get that model. I'm saying I'm the buyer. I've invested. I'm one of 100 people. Who is actually selling the whole thing so that you can make money? Because again, in a normal transaction, if I'm an investor, there's someone that's driving that transaction to sell it again, to flip it, essentially. Who's driving that if we're all individual holders and if the creator itself is not selling it? That's what I'm trying to understand.
Yeah, go ahead.
I don't have an answer for that.
Well, that's an excellent question. And so, I mean, it really has to do with custodianship of that asset, right? So, I mean, someone is going to have to be responsible for having fractionalized it. It could be us, it could be you, but I mean, somebody has to make the decision, and so that person is going to be, driving the resale. And, that may be happening with the input, of all of the shareholders, if you will. I mean, it may be that, I've bought something, or I've started something and I've fractionalized it, and all of you are investors, and I'm thinking, okay, I've been tracking the value of this. This is what we paid for it. This is what the value is now, and I think that we should sell it. And I may decide, well, okay, it's not just going to be my decision to sell it. I'm going to actually open it up, and we're going to decide. We're going to come to a consensus on whether or not it should be sold.
Jeff.
Thank you.
Nicely done.
Yes, another question?
Going back to the real estate example, who is guaranteeing ownership of the real estate? Because from the regulatory perspective, the government is guaranteeing it through a deed. So how is that?
Okay, well, this is a very interesting topic to me, because when we first had this idea about selling houses, I started looking into it, and if you go online, you can see that there are certain places claiming, oh, we're selling houses on chain, and the first thing that I smacked up against was the title, the actual document, the regulatory document that proves that I own something and I'm selling it to you. And that is an extremely manual process right now. So let's just talk about houses. So I don't know if you own a house, but if you own a house, you have a title to that house.
Yeah.
Now, you've never seen that title.
Yeah.
But when you bought the house, you paid for somebody to pull that title, verify that the person who was selling you the house owned it, and there were no claims against it. And you now own it. That's been filed with the assessor's office in the county you live in. It's, it's a physical, manual process. And that's actually where we started trying to solve this real estate problem. Because, for it to really function on chain, that has to become a digital process. Yeah. And so actually what we discovered is when you see on chain, if you Google it, right now you'll see somebody, oh, I sold my house on blockchain and the deal closed in 24 hours. Well, that's not really true, because what happened was they transferred the ownership of their house to an LLC. They formed a single person LLC that holds the title. They then I form an LLC that owns the house, that has the title, I sell it to Phil. The title doesn't need to transfer because the title belongs to the LLC. But this regulatory problem is one of the key components of it. So we're actually working with these large companies that really control the title flow, title agencies, county assessors' offices, states, in some cases small countries, about starting to digitize all of these titles, so actually that you as the owner would have access to your title, and when you were buying a house where the title had already been digitized, you would not have to pay the same type of fees that you pay now. Now, that all sounds great. I mean, that doesn't get past certain other regulatory things like insurance or certain taxes and stuff like that. Like when I first had the idea, I was like, oh, we could sell houses for nothing. But it doesn't work out that way. There's still certain fees that are always going to be there.
The other aspect is what Jeff was saying. If you buy a house today, it takes at least 60 days. Like there doesn't need to be a reason for that to happen. But by putting all the assets on the blockchain, as Jeff was describing, the idea is it can happen a lot faster, right? There's really no reason it needs to take 60, 90 days.
Maybe one day governments can learn how to read the blockchain, and then from there.
There you go.
Appreciate you.
So.
The woman behind you. Thank you for the question.
First, I love your projects on real world assets, but that are not financial assets. So you going back to physical assets like real estate, or a piece of art like a Monet, or a Picasso. That's not like a digital art. And so my question is also on the real regulatory aspect. So if you're tokenizing like a piece of artwork that's really in the millions, multi-millions, but when you're selling it to retail investors, so what are have you thought about like the licensing, investor suitability, that aspect? Can you comment on that?
Yeah, absolutely. You look like you want to say something.
Yeah, I think everything that we're doing, we are sensitive to the regulatory environment, so we will never be in violation of existing rules of the road. We will operate within that very, robust legal environment. And our analysis today is that what we're proposing, we're not violating any, law.
And I'll mention one thing too. I went through somewhat of a lengthy introduction about who we are as a company, and this is part of kind of our DNA. Like our founders were there from the beginning, right? They chose not to have an ICO because there's a lot of question marks about that, right? So there's a risk-reward thing, but we, as Phil is saying, our North Star is we're taking, we're doing this the right way in terms of regulatory process, in terms of doing the right thing as we move forward with all these projects.
Yeah. Wait, no.
Yeah, let the guy go first, and then we'll come back. How's that?
Oh, okay.
Yeah, let him go first.
Because I actually have something else I want to say about the art thing. But
I think
that's okay. But yes,
guy with the beard. Did you have a
the
question?
gentleman has been waiting in the back.
Great beard, by the way. Great beard.
Thank you. I'm curious, back to the real estate example where you have a basket of houses and things like that. It sounds very much like a tokenized REIT, and just kind of curious how you handle the securities aspect of it as far as registering them and who can trade them, where they can be traded on an ATS or in a decentralized way.
Well, even though it pains me to hear you use the phrase REIT, I guess it does sound like that. I don't know that I've got a complete, and I don't know that I can answer the regulatory question as thoroughly as I might like to on that. It's a very good question. And I mean, I hear two things. One, I don't know that we've got all the regulatory stuff figured out. But two, if we don't want to be considered a REIT, what do we need to do?
Yeah, and I'd say think a little bit bigger in the, some of the working elements might be quite similar. Typically in a REIT, the on and off ramp is buying in fiat currency, right? I can only invest in dollars. We will enable on and off ramps that you can pledge a stable coin, Bitcoin, Ethereum, and then have that translation in the back so that the liquidity pool expands because the mechanisms for payment and investment will be broader. Does that make sense too?
A little bit, yeah, but I guess, I mean, traditionally those can only be traded on registered platforms, alternative trading systems. I said traditionally those can only be traded on like alternative trading systems, registered securities brokerages basically. So how do you get around that or allow people to trade these on a secondary market?
Well, I mean, we would like to develop our system so that the trading would happen on our platform.
So actually, we're being told that our time is running very short. So thank you for coming today. I hope we gave you a glimpse of what we talk about, what we mean when we talk about real-world assets and kind of our focus as a company. As Phil had mentioned, we are directly behind this stage or this area. Our sign says "Welcome to the block." So if you want to come in, if you have additional questions, please feel free to come by. But thank you so much for spending the time with us this afternoon.